Hey, it's Josh High with Market Prime Mortgage, and I'm going to talk about today a common thing that I see out there. Let's say that you come to me saying, I want to buy a house. I got $10,000. I saved it up. I'm getting a gift from family, whatever. You got $10,000 to go spend on a house to put into it for your down payment, closing costs, all in. You can't break that amount. Okay, $250,000 purchase price. On an FHA loan, your down payment's going to be $87.50. That's 3.5% of $250,000. All right. Now your closing costs typically run in the neighborhood from about 2.8% to 3.5%, somewhere in that ballpark, depending on a bunch of different things with title fees and insurance and all kinds of stuff. Consider this. We have the ability many times to give what we call lender credit, and a very simple explanation of lender credit would be financing your closing costs. Okay. What we do basically is we up your rate. So in this scenario I'm going to show you, you'll see that going up less than half a point in your rate from 3.625 to 4 actually creates over 2 points worth of lender credit that we can use and apply towards your scenario. So take a look at this scenario here. That's exactly what I just talked about. So we're going to buy a $250,000 house. We need $5,000 in closing assistance to be able to stay under our $10,000 maximum that we want to put into the property for down payment closing costs. I want to show you how this works. So if you see here, I've got these two different scenarios laid out. These two different scenarios are showing seller paid closing and lender credit. You'll notice that the purchase price is the same, $250,000. Loan amount's the same. Interest rate's going to be different because your seller paid closing costs, you're getting the basic par rate, the rate that you qualify for, with nothing added on that. Now the lender credit, you're taking that rate up less than a half a point to 4%. All right. Your monthly difference in payment is only going to be about $52. And your cash to close essentially remains the same. It's actually about $100 better in your lender credit scenario. So basically, you're going to end up financing the same loan for a little bit more monthly, but you've increased your chances of winning that property, and you don't lose it over a $5,000 seller concession. When you came in, you said, I only have $10,000 to get into this. How can we make that happen? So what we're doing here is your cash to close is still going to be under your $10,000 amount. And if you look here at the seller paid closing cost fee detail, which you'll see here, seller paid closing costs $5,000. And if we go look at the other detail of the lender credit, you'll see a lender credit here of $51.37. So that's about as close as I could get it based on the all else being equal, $5,000. So you wind up paying a little bit more per month, $53 in this scenario, but your seller gets more money, your offer looks stronger, and it's an overall better approach when it comes time to compete if you're dealing with a competitive market, which we are here in the area now. So food for thought, think about it. If you need to talk about this some more, I'd love to walk through your scenario. Call me at 813-448-1501. Email me, josh@marketprime.com. If you want to get started with a pre-approval, visit getwithjosh.com, fill that out, and I'll be back to you within a day. All right, hope to talk to you soon.